Hi, it's Lee and welcome to the Tesla Economist. You see what I've been saying? Tesla has run up about 20% over the last month. That's huge. And what has the company actually shown for it? Kind of nothing. We can't even attribute it to the macros considering the Nasdaq is actually down over the same period. Tesla has shown very little over the last month, yet up 20%. Okay, things have happened over that time. We've had the shareholder meeting and Elon reassured investors he was sticking around as CEO. He also said that Tesla would try advertising too. And Ford have partnered with Tesla superchargers. But Tesla were going to open up all their chargers regardless. The financials, demand, deliveries, production, margins are all about the same. Tesla's stock price is not about those things. This is what I've been saying. It's about the confidence in the story, the mission, or the master plans. In addition to that, we saw Nvidia beat earnings and the stock skyrocketed to actual all-time highs. Now the market is potentially wondering, well, if Nvidia is at all-time highs and they're going to benefit majorly from the AI bubble, and Nvidia crashed really low at the start of this year like Tesla, and Tesla is potentially leading the way in AI, then should Tesla run too? I mean, AI is going to be big. If Nvidia is now almost $1 trillion company, then how much will the company be worth that will use AI in its robots? Again, like I say, are robots and self-driving cars going to be the future? If you think so, then there's no one else close to Tesla. Do you realize that? Tesla is the real robotics company in hardware, software, and data. The barrier to entry to that is likely in the tens of billions, with engineers that may not even be available, and probably about 5 to 10 years. And that's just the barrier entry to catch up to where Tesla are now. By that stage, Tesla would have jumped further ahead again. I used to be so into what was happening with Tesla in real time. What are the wholesale numbers for China? How many new Teslas insured? What's Google Trends for the Model Y this week? How many vehicles in inventory? What's the 4680 run rate? This is not the way to think. You need to zoom out and see the forest for the trees. Yes, Tesla's demand may be less if interest rates are higher and the economy is looking weaker. But last year we saw the exact opposite. Demand will be cyclical, but the technology will keep improving over any time. Tesla are not cutting back in R&D or even production. It's so easy to get emotional about things that are happening right now, especially when it gets compounded with FUD and a falling stock price. Nowadays, when I start to sense this environment or sentiment, then I feel like that means it's time to buy. I've been testing this by trading some options. 95% of technical analysts lose money. The odds are stacked against you. And most likely, said analysts are smarter and know how to read charts and indicators better than you or me. So what chances do we have trading? Basically none if you're doing the same as everyone else and the odds are that bad. So instead, I'm trading on emotion. Now, some people call me a gambler, and yes, I'm okay to admit that this is gambling, but even at my peak, I only ever put 10% of my actual portfolio into trading. I follow this stock a lot and feel like I know it really well, which I consider an advantage too. I don't even invest in any other stock, let alone trade. And at one stage, 30% of my holding was in my trading account. But that's because I had gone up about 600% in several months, compared to the stock price only doubling, due to leverage I took on trading. I also don't ever suggest or recommend trading to anyone, and like I said, I'm not betting the house on it. I do it for fun more than anything, with money I can afford to lose, and I know some of you do too. Anyway, I digressed a little. My point was really the emotion that even investing carries over relatively short periods. One of my best friends has held Bitcoin despite it dropping 90% of its value at one stage. Again, these are the times to be buying when it feels this bad. Of course, catching the bottom is very difficult, especially if something drops 90%. You might have thought it was a good deal when it had dropped 50%. However, Bitcoin and Tesla are not quite the same. So what if Tesla's stock price really starts to run, and the market thinks it's due to the future of robotics and AI? Tesla bubbled before due to EVs, due to 4680 cells ramping up production and reducing costs, and it looked like there was unlimited demand for Tesla, and all that ever mattered was production numbers, as every Tesla was pre-sold before it was made. And this was during times of low interest rates, lots of demand for vehicles, and chip shortages affecting supply of competitors. Tesla was going to the moon. 4680s and the tax credit and subsidies from the Inflation Reduction Act looked like Tesla would be able to sell the Model Y for almost $20,000 less and still receive the same amount of profit margin. And with the new factories, Tesla could more than double supply, which would have been eaten up by this unlimited demand. And even if Tesla needed to lower prices, there was an enormous buffer there. Of course, Tesla missed their targets on 4680, and it has to date instead been a failure until we actually see some significant ramping. But that's not to say the stock isn't going to do anything until 4680s is a success. The market isn't done with Tesla. It may look at it as an AI company next and bubble the stock price again, just like it did with EVs. Next up, AI and robotics are their future, and we may see breakthroughs in various market segments that further validate this. And Tesla will also be making some leaps from time to time with full self-driving and their bot. If it's looking close, then people will start adding up the numbers again, like they did for 4680 sales. If Tesla have this many vehicles paying this much every month for subscription for FSD, then that will be this many $1 billion a year in profit. Wow, these numbers look amazing. But then if Tesla also license their software to Ford and probably any other legacy auto company that is smart enough to use it, then it'll mean their market increases a massive amount again. Oh, and then the Robotaxi income too, which gets nutty. The stock market starts adding these numbers and then discounting it relative to the chances of it occurring. Okay, sure, that is currently factored in now, so it's more like the market starts thinking the chances of occurring soon are looking more likely. So the weighting factor increases. Say FSD and robotaxis are worth something like $5 trillion for argument's sake, and the market is giving it just a 5% weighting factor currently, then it's only adding about $250 billion to the stock price. 5% is not a particularly high likelihood though. If the chances look closer to 20%, then that would be 4 times the confidence, which would thus mean $1 trillion valuation. And I'm just talking about that one side of the business. There are lots of other sides that have chances to be very profitable for Tesla too, and they all add up with their own arbitrary weighting index and potential profits. I mean, let's face it, robotaxis, despite having insane profit potential, is adding very little onto the stock price currently today. It feels like a pipe dream to most investors. It's hard for some people to even take it seriously. It almost feels like science fiction. But we don't even know how it would manifest. We have this idea that suddenly all Teslas will be available for the robotaxi fleet overnight with some over-the-air update. But it may not come to fruition like that. It may start in certain cities, in a certain perimeter, to remove edge cases perhaps. Maybe up and down the Las Vegas Strip might be a good place to start, just as an example. I know it almost felt like it's going to be a while until Tesla even gets back to $200, but seeing what else is happening in the market and how some stocks are behaving, I'm now thinking that it could get well past that stage, perhaps mid-200s, and there may not even be much major resistance after that, and we could see 300, which would really shock Wall Street. I've said before, there's a 25% chance Tesla could return to 300 this year. Anything is possible with this stock. Then, on top of that, add a bit of well-timed fuel onto the fire, like Mexico breaking ground, Model 3 Highland, and Cybertruck. Then it really is possible, assuming macros hold. It may not take too much wind back in Tesla sales to start to see a crazy rally again. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.